Hey guys, welcome to another Trade Genius podcast. I got my good friend Bob here, and we're going to talk about volatility because brace for it, it's coming with a vengeance. Let's dive in.
Trade Genius.
All right, Bob. So volatility, right? We got some seasonality. So also in the mix, we've got Chinese volatility, which has just gone bonkers. Tell us all about what's going on.
Yeah, so as if we don't have enough things to worry about, can you throw the seasonality chart up first? Yeah, so this is what normally happens in an election year. And if you notice, we're at that point where we're going to get a bit of a spike, and we're in the middle of it now to like the middle of October. Remember, Phil was telling you guys that, we may experience some weakness in the market, increased volatility into the middle of October. Then we're going to get a respite into Halloween. And then coming out of that until the election, we're going to probably get another spike, and then it's going to end fast. So first week up, second week down. And then typically in election season, that probably not as critical as this one, you kind of glide into the end of the year. I think this chart here, Phil, looks like a Trump win chart. I think a Kamala win chart is going to look a lot different because a lot of people are going to have to change the way in which they do business based on some of the things that she promised the American people that she's going to do to them, not for them, in this next coming administration. So that's pretty wild. The other chart was totally unexpected to me because it's now China, 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 China. If you have any free money, buy Chinese stocks. Well, something happened on the way to their fall holiday schedule. Volatility just went straight up, Phil. Now, what I don't understand is it could be people putting max protection on because they're going to be off for a week, and the world may change drastically here if Israel takes out Iran's oil producing capability, the big if. The country that affects most after Iran is China because they're the recipients of a lot of this oil. And so I think there might be a lot of protection going in here, but that was pretty wild, Phil, to see how much volatility they're putting in, how much protection people are putting in to go on a week's vacation in the Chinese market. What do you think?
Yeah, it's almost like somebody knows something, isn't it? And you do have a lot of risks in the market right now. And, China's just gone through a big round of stimulus as well, which also tells me that they were probably afraid of something. So, I don't know what exactly that is, whether they were tipped off that, something, globally is going to be kicking off, then, you're talking about something that might be black swan type event. But, something has spooked the central banks for sure. I mean, Fed came in hot with a 50 basis point cut. You would normally avoid that because historically when a 50 basis point cut is your first cut, without fail, you are going into a recession. And the like we've talked about before, the 1, 2, and 3 year returns from a initial 50 basis point cut is vastly different. They're all very negative versus a quarter point initial cut, which actually is very positive. So I think that the central banks probably are know something or know of a risk of something that the rest of us don't. And I think that if you look at the tea leaves that are floating at the surface, I think, they're basically implying that, there's something cooking here in this particular brand of tea. So I think we got to be careful. But at the same time, I think if we can get through the election, right, and you can get through where the hedges are starting to come off and nothing's really happened by then, you have to respect what we call a positive year flow. And that means that if you're positive into Q3, then likely what's going to happen is those flows are going to reinforce the move into Q4 because you basically have people that are maintaining a net exposure to the markets and they're going to be reinvesting. And so they're going to be reinvesting to maintain that exposure, and that's going to drive markets up. And it's going to be basically a playbook like we saw last year because the same effect happened. But if you're negative into Q3 and you're seeing this kind of behavior, then you're probably going to see a crash in Q4. Now, I would say be on the watch for this next year, right? 12 months from now, if we're seeing these same sort of things, Fed's cutting aggressively, you see Chinese VIX popping, and we have a negative year to date into the end of September, hold on to your hats. So the saving grace here is we have a positive year to date, and hopefully if nothing kicks off, that would be something that these guys are bracing for. Because sometimes that happens too, right? You brace for it, you hedge for it, and it doesn't happen. And then the opposite thing happens and we take off. So hopefully we can continue to ride this a little bit more. But then, like I said, I think this rally has just a little bit more to go. I think the legs are getting tired on it. It's been a good run, but I think all of the tricks are finally played out. And then we're going to have to pay the piper starting Q1 of 2025.
Yeah, look, there's already changes happening. Oil should be $10 or $15 lower a barrel right now, and it's not. And so you're already seeing things that shouldn't be happening that are happening. And only part of that really can be pushed to potential war because there's a lot of spare capacity in Saudi Arabia. I think there's a lot of worry here about them. Oil is in the wrong place for the wrong people at the wrong time, and it's keeping prices elevated. So some things are already changing. And, for me, I still think it's the great rotation. Gold and silver holding up. Bitcoin doesn't like the initial reaction to bad news, but they certainly come on pretty fast afterwards. So I think that's what's going to happen here, Phil, too. The only thing that I worry about is that Trump's a known entity to the markets being a president. Kamala Harris is an absolute blank slate. I don't think she even knows what she wants. And so I think there's going to be a lot of uncertainty going into 2025. And if you're smart, right, and you made a lot of money, you'll wait till January to sell. Obviously, you don't want to pay the tax sooner than you have to. And then I think we'll probably get a big sell-off in January, and that'll set the mood for the rest of the year. So it's kind of where we are. And we're going to show you a chart tomorrow to show you why the Fed is aggressively printing. Reducing their rates. They've been stealing from us again, guys, and we'll show you how and show you why and show you how much. We'll catch you guys tomorrow. Come check us out. Check out our room. If you like to be an active trader, come in the VIP room. The last couple days, we've made enough for everybody to make a year's worth of the service in each of the last 3 days. So, and the service isn't too expensive either. So check us out, tradelikeagenius.com. Catch you later. Bye.
Bye.
Trade Genius.